Welcome to the Metis podcast. Today, you're joining us for a deep dive into tariffs. They're those taxes on imported goods, constantly in the news, and they have a real impact on the global economy.
Definitely.
You've probably heard the term, but we're going to go beyond the headlines today. Really unpack what they are,
Mhm.
what different kinds are in play right now, what they're supposed to achieve, and, well, the economic ripples they create, which can often be quite surprising.
Yeah, those unintended consequences.
Exactly. We'll also look at the recent period under former President Trump, how that shaped things and the challenges we're sort of facing today.
Right.
Our goal is really just to cut through the noise, give you a clear understanding of this, well, pretty complex issue, looking at both the goals and those unexpected side effects.
It sounds good. So maybe to kick things off, at its heart, a tariff is, well, it's simple enough conceptually. It's a tax.
Good to tax.
A tax one country puts on goods or services coming in from another country.
Mm-hmm.
But what's really interesting is the history, especially in the U.S.
Yeah.
Yeah, the U.S. has a long, kind of varied relationship with tariffs. If you look back, say, 19th, early 20th centuries,
Mm.
the U.S. relied pretty heavily on them.
More so than now.
Oh, much more, in terms of average rates on manufactured goods, for instance.
Mm.
It was a very different picture then compared to, the later 20th century. And even before that, tariffs were actually a primary way the federal government funded itself.
Really? Like income tax wasn't the main thing.
Not back then, no.
Yeah.
Tariffs were huge for revenue. Economists like Douglas Irwin have written a lot about this. So the historical uses were revenue generation, protecting domestic producers, shielding them from foreign competition, and also using them as a bargaining chip, trying to get other countries to lower their barriers.
Okay, so they're not new, but it feels like maybe the way they're being used now or the reasons are a bit different. What kinds are actually being used today?
You're right, the landscape now is quite diverse. You've got ad valorem tariffs. These are basically increased duty rate.
Ad valorem, percentage-based.
Exactly, based on the value.
Yeah.
And they apply even to goods coming in under existing U.S. trade agreements.
Ah, so even if there's a deal.
Right, with the main exception being the USMCA,
Mhm.
the deal with Canada and Mexico. And these tariffs are stacked on top of any other duties, fees, taxes, whatever.
Okay, stacked on top. Got it.
Then you have these more recently discussed reciprocal tariffs. The idea there was they be calculated based on the trade deficit the U.S. has with a specific country.
So if we buy more from them than they buy from us.
That was the concept, yeah. Interestingly, these were actually paused for 90 days for most countries, but not for China.
Mm.
And the proposed rates themselves, they're pretty wide-ranging, something like 11% for goods from Cameroon, but up to 50% for goods from Lesotho.
50%? Wow.
Yeah, imagine a small economy like Lesotho suddenly facing a 50% tax on their stuff entering the U.S., the potential impact.
It's huge. That kind of jump could absolutely reshape trade, especially for those smaller nations. What other types are in the mix right now?
Well, we also have national security tariffs. These have been applied to key sectors like autos, auto parts, steel, aluminum.
The Section 232 ones.
Exactly. And those generally affect imports from, well, pretty much all countries. Looking back a bit, there were the IEPA-based tariffs,
IEPA.
International Emergency Economic Powers Act.
Mm-hmm.
Those were used against China, citing a national emergency. And those are still in effect.
It'll go in. Okay.
Yep. And similarly, the Section 301 tariffs, also targeting China, with rates between like 7.5% and 25% on a whole lot of goods, those also remain active.
So several layers targeting China specifically.
Seems that way.
Yeah.
Then you've got fentanyl tariffs. These apply to all imports from China and also non-USMCA imports from Canada and Mexico.
Okay, a different angle there.
Right. And there are also product-specific tariffs, like on certain types of steel and aluminum products, derivatives, and vehicles. Plus, more recently, we saw Venezuela oil tariffs announce an extra 25% on oil and gas purchases.
Huh.
And finally, there was that talk, the announcement of a potential universal tariff, like 10% on all imports.
Across the board.
I
On
think
everything.
That was the proposal, yeah, with maybe even higher rates depending on the trade balance with the U.S. So, yeah, it's quite a toolkit of trade measures being used or proposed.
It really paints a picture of a very, very active trade policy using tariffs in all sorts of ways. So beyond just raising money, what are the main goals? What are policymakers trying to achieve with all these?
Well, historically, like we said, revenue was key,
Yeah.
especially early on.
Right.
And protecting those infant industries,
Mm-hmm.
giving new American businesses a leg up, basically, and addressing trade imbalances. That's been a recurring theme for a long time.
Sure.
More recently, though, the stated goals have really broadened out. A big focus now is on what are seen as unfair non-market policies and practices, things like industrial overcapacity in certain countries.
Like too much steel being produced globally, driving down prices.
Exactly, that kind of thing. There's also this growing view that economic security is national
Oh,
security.
wow. Linking the two directly.
Right. Which can then be used to justify these targeted interventions in specific sectors. And of course, tariffs are very often used as leverage in trade talks.
The bargaining chip idea again.
Precisely. The idea is to pressure other countries, make them agree to deals that are maybe more favorable to the U.S. It's like saying, look, it's going to cost you more to sell here unless we work something out.
Okay, using it as a threat, essentially. But I feel like I've also heard some, well, less traditional ideas about why tariffs might be used.
Yeah, there have definitely been some more novel perspectives put out there. For instance, one former advisor to President Trump floated the idea that tariffs could potentially be a way for other countries to sort of contribute to the U.S.'s global role,
Contribute how?
like helping pay for the financial and military stability the U.S. provides. He even used the word tribute.
Tribute. Wow, that's quite a framing.
It is. It suggests a very different rationale, doesn't it? Moving beyond pure economics into, like, global power dynamics.
Yeah.
And then you also have the more specific aims, like trying to curb fentanyl smuggling or boost border security, cited as reasons for certain tariffs.
Okay, tribute. That definitely reframes things. So we've got all these different types, all these intended goals. What actually happens? What are the real-world economic consequences? The dollars and cents.
Right. This is where it gets really complex.
Yeah.
Often not quite as straightforward as you might think. So fundamentally, tariffs are a direct tax on imported goods. That's the starting point.
Okay.
But the key question is, who actually pays that tax in the end?
The importer. The foreign company. Us.
It could be any or all of them. The economic burden can fall on domestic consumers, through higher prices. It can fall on domestic businesses that use those imported goods as parts or materials, or it's some mix.
And what does the evidence usually show?
Well, economic studies tend to suggest that over time, a pretty significant share, maybe even most of the cost, gets passed on to consumers.
So we end up paying more at the store.
Often, yes. And another direct consequence, higher tariffs mean fewer imported goods because they just get more expensive.
Makes sense. Less demand.
Right. And that can then have this ripple effect on capital flows. If foreign countries are selling less to the U.S., they might have fewer U.S. dollars to then invest back into the U.S.
Fewer dollars to buy things like U.S. government bonds.
Exactly.
Yeah.
Which, in turn, could potentially mean that U.S. households might need to pick up more of that government debt, possibly diverting savings away from, more productive investments in businesses or capital. It's all connected.
So it's not just about the price tag on imports. There are these broader financial market links, too. What about just the general economic vibe? Does it create instability?
Absolutely. The mere act of, announcing tariffs, changing them, talking about them, it injects a lot of uncertainty.
Businesses get nervous.
Businesses, consumers, everyone might become more cautious, hesitant to invest, to hire, maybe even just to spend money, because the future looks less predictable. Costs might go up, markets might change. And we should also think about the impact on those smaller, more vulnerable economies we mentioned.
Like Lesotho with the potential 50% tariff.
Exactly. Those reciprocal tariffs, even if they only affect a tiny slice of the overall U.S. trade deficit, and even if they don't raise much revenue for the U.S., they can disproportionately hammer those smaller countries.
Making it harder for them to sell anything here.
Right. It can really block their access to the U.S. market, hinder their development, stop them from diversifying their economies. Imagine you're a small coffee producer somewhere, and suddenly there's a huge tariff. It could wipe you out.
Yeah, it sounds like policies aimed at one thing can have these really significant, maybe negative knock-on effects elsewhere. What about the direct impact here on us as consumers? Are prices actually going up because of tariffs?
In many cases, yeah. Especially for goods where we don't make much, or any, here in the U.S., or where there aren't easy substitutes.
Like certain spices or specific materials.
Exactly. Think vanilla from Madagascar or cocoa, things like that. Tariffs on those types of goods are pretty likely to just mean higher prices for consumers. And looking at the bigger picture, some economic analyses, like from the Penn-Wharton budget model, they've suggested that the current tariffs could actually reduce overall U.S. GDP in the long run.
Reduce the size of the economy.
That's the projection, yeah. And that's even before you factor in how other countries might retaliate.
The blowback.
Right. If you include potential retaliation, other countries putting tariffs on our exports, then the negative hit to U.S. GDP could be even bigger. These analyses also often estimate that tariffs work like a tax increase, essentially. They reduce the after-tax income for the average U.S. household.
So even if the government gets some revenue.
Right. Even with that revenue coming in, the overall economic pie might shrink, and households could end up with less spending money.
So the idea that tariffs automatically boost the domestic economy,
Yeah.
it might have these hidden costs that maybe outweigh the benefits.
That's a really key point of debate. While tariffs do bring in federal revenue, organizations like the Tax Foundation have estimated that the recent rounds of tariffs, taken together, represent a pretty significant tax hike for American households.
A tax hike, effectively.
Effectively, yes. And we absolutely cannot ignore retaliation. Other countries haven't just sat back.
No.
Many have already slapped their own retaliatory tariffs on U.S. exports or threatened to. And that, of course, hurts U.S. GDP further and hits American companies trying to sell overseas.
So farmers, manufacturers trying to export.
Yeah, exactly. And even within specific industries like steel and aluminum, where we saw those Section 232 tariffs, some studies actually suggested those tariffs might cause more job losses in industries that use steel and aluminum.
Like car makers or construction.
Right. More losses there than any job gains in actually making the raw steel or aluminum domestically. Tariffs on inputs can really hurt downstream industries. And here's a point that often tricks people up. A lot of economists argue that tariffs might not even work to reduce the overall U.S. trade deficit in the long run.
Really? Isn't that often a stated goal?
It is, but the argument is that tariffs can also reduce U.S. exports, either because the dollar exchange rate adjusts or simply because of that retaliation we keep talking about. So imports go down, but exports might go down too. The net effect on the deficit is uncertain. It's this complex web.
Definitely sounds very complex. Lots of potential unintended consequences swirling around. Now, let's pivot a bit to former President Trump's role in this. His administration really marked a big shift, right? A much greater focus on tariffs.
Oh, absolutely. The period after 2016 saw a major ramp up in trade protectionism in the U.S. And yeah, that was largely driven by policies started under President Trump. His administration rolled out tariffs on a huge range of imports. We talked about the steel and aluminum ones, the national security tariffs, and also those really significant tariffs on goods coming from China. The current talk about reciprocal tariffs is this whole approach of using tariffs as a negotiating weapon, and for reasons beyond traditional trade goals. It's really a continuation, maybe even an expansion, of the strategies he put in place.
He certainly seemed to have a very clear, maybe different view on trade and tariffs. What was the philosophy there, as you understand it?
Well, judging from his statements and what his advisor said, it seems President Trump saw tariffs as a powerful tool, a way to, quote, win on trade.
Win.
Yeah, and bring back what he viewed as American economic strength, basically challenging that long-held consensus around free trade. His negotiating style was definitely characterized by taking a very hard line.
Using the threat.
Using the threat and actually implementing big tariffs as leverage, trying to force concessions from trading partners. Some of his team even framed it as like a liberation day for American workers.
Liberation Day.
Yeah, arguing tariffs would stop jobs moving overseas, bring manufacturing back.
So the core idea was protect American jobs, boost domestic industry. Was that view widely shared internationally?
Domestically.
Oh, definitely not universally shared. While supporters argued, yes, this will revitalize U.S. manufacturing, get us better deals, many others were really concerned.
About what specifically?
Well, damage to the global trading system, for one, the risk of triggering trade wars, and ultimately harm to the U.S. economy itself through higher costs for businesses and consumers, and hurting U.S. exporters who face those retaliatory tariffs.
Right.
We saw pretty strong negative reactions from a lot of countries. Even close allies like Singapore expressed disappointment. They pointed out, hey, we have a free trade agreement with you. We actually run a trade deficit with the U.S., and yet we're still getting hit with these tariffs.
Yeah, that must have stung.
It seemed to. And the fact that the U.S. later paused those reciprocal tariffs for most countries, maybe that suggests a recognition of the complexities or the downsides, perhaps shifting more towards just the threat of tariffs as the main tactic rather than widespread implementation, using the threat as leverage still.
Possibly. You see groups like the B7, that's the business community, across the G7 nations. They've consistently voiced concerns about all of these unilateral actions. They strongly push for negotiation, cooperation, working within the existing international rules.
It sounds like this more muscular use of tariffs really stirred things up globally. Which kind of brings us to now. What are the main challenges we're facing in this current environment?
Well, one of the biggest is just the sheer level of uncertainty these policies have created.
Yeah, that unpredictability again.
Exactly. The scale of it and sometimes the legal basis. It's facing court challenges within the U.S. We've seen lawsuits over those IEPA tariffs, for example.
Hmm.
And then on the bigger international stage, this trend towards unilateral action, one country just deciding to act on its own, it really threatens the whole rules-based international order, the system built around the World Trade Organization.
The WTO.
Yeah. Finding that right balance. It's tricky. How do you use targeted trade measures if you genuinely think there's a national security need without wrecking the stable, predictable trading environment you have with allies? That's a huge challenge for policymakers right now.
And the risk of things escalating.
That's always there.
Yeah.
The risk of escalating trade tensions, maybe even a full-blown global trade war. It's a major concern for the world economy.
And beyond those big geopolitical worries, what about the more practical day-to-day challenges from using tariffs more?
Well, like we've been saying, tariffs can have really complex, often unforeseen impacts across different sectors, different countries. Trying to accurately predict and manage those unintended consequences, it needs really careful analysis, and frankly, policymakers are often playing catch-up.
It's hard to map out all the ripples.
Very hard. And then you have significant disagreement within the U.S. itself, among economists as policymakers, about whether these tariffs are actually effective, about what their overall economic impact really is. Just navigating those different viewpoints and finding a coherent way forward for U.S. trade policy, that's a challenge in itself.
So, as you can probably tell now, you, our listener, should have a much deeper grasp of tariffs. They really are, well, much more than just simple taxes on things coming into the country.
That's simple.
They're complex tools, they have this rich history, and really significant consequences often debated, as we've heard, for the global economy. And for you, as a consumer, as someone participating in that economy, from funding the government way back when to being used as this geopolitical lever today, understanding tariffs really gives you a crucial lens for looking at current events. We've touched on the types being used, the intended goals, and there's often surprising economic ripples, especially with the recent policy shifts.
Yeah, and I think the really fascinating questions looking ahead are about, the long-term effectiveness. Will these measures actually achieve their stated goals? How will our trading partners continue to adapt, to react? And ultimately, who really bears the true lasting cost of these policies?
Right.
Hopefully this deep dive gives everyone a solid foundation to follow these developments as they unfold. Maybe it sparks some thinking about specific industries you care about, or how these trade policies might evolve in the next few years.
Lots to keep watching.
For sure. These are definitely crucial questions to keep in mind as this whole global trade story continues. Thanks for joining us for this deep dive on the Metis podcast.